Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings. Today we're diving into Trio Petroleum's latest 10K amendment. And trust me, this one's a wild ride, more plot twists than your average soap opera. We will see if the third time is the charm for this report. Trio Petroleum, ticker TPIT, just filed an updated version of their annual report on Form 10K for 2024. This isn't the first time they've had to amend it. The SEC, or Securities and Exchange Commission, had some questions, so they're clearing things up. Basically, they're responding to comments and concerns raised by the SEC about their initial filing. Nothing financial was changed from the previous amendment, though. They had some executive turnover in the middle of the year. Robin Ross became the new chairman and then CEO, while other executives transitioned to different roles or stepped down. Plus, they changed their accounting firm, switching from B.S. Borger's CPA PC to Bush & Associates CPA LLC. All of this was in the middle of 2024. Let's jump into the South Salinas project, one of their main properties. Production testing restarted at the HV3A discovery well in President's Field. This is good news, and they're planning to make it even better in the coming year. At the McCool Ranch oil field, they successfully restarted operations, and that included getting oil production going again. They restarted 3 wells, HH1, 35X, and 58X. They're also looking at getting 2 more wells up and running. Now for the Asphalt Ridge project in Utah, it's an interesting project where they acquired an option to purchase a working interest. They've already put some money in and have a small working interest. The first well found a promising tar sand pay zone. Trio also wants to capture and store carbon, which will help reduce their carbon footprint. This carbon capture and storage project is still in early stages, but if it works out, it could be big for the South Salinas project. There's an attempt to acquire oil and gas assets in Canada, however, BLI expired and the deal won't happen at this time. Now let's get to the numbers, which is what everyone cares about. For the fiscal year ended October 31, 2024, the filing says that TPET is a smaller reporting company, an emerging growth company, and is not an accelerated filer. TPET also confirmed that their financial statements don't include any kind of error correction and that they are not a shell company. The public float, or the value of shares held by non-affiliated investors as of April 30, 2024, was just under 14 million shares of common stock outstanding. Here's the table with some numbers that management thinks is important. Keep in mind there is no guarantee to any of these numbers. Let's look at this table in terms of discounted cash flows and phase 1 of the South Salinas project. Of 33 undeveloped reserves, hasta 29 Tevenor flow flight in cash flow, discounted by 10%, possible P2 undeveloped reserves. Phase 2 of the South Salinas project for 45,938,680 in cash flow, discounted by 10%. Possible P2 underdeveloped reserves, IF22 Den 10,766,130 in cash flow, discounted by 10%. Possible P3 underdeveloped reserves. Phase 3 of the South Salinas project 230 and 30,94,000 and 874,030 in cash flow, discounted by 10%. Possible P2 undeveloped reserves. $7 possible P3 undeveloped reserves. Kevin and Bai 198,350 undeveloped reserves a fluff. Remember that the P3 is the least likely scenario. Trio's stake in South Salinas, discounted at 10%, yields EL 47.4 N 1410 hours 900 and all 40 in cash flow, discounted by 10%. Possible P2 in developed reserves, quote 255 35,900 and 54,080 in cash flow, discounted by 10%. Possible P3 undeveloped reserves in 255 10%. Possible P3 undeveloped reserves. Keep in mind these are undeveloped reserves, meaning the projects need further investment to extract them, which may or may not be successful. The amount of energy that would need to be spent for these numbers to come to fruition is very high. Now let's address the elephant in the room, risks. TPET is upfront about the challenges they face. They've had operating losses in the past. Also, the report raises substantial doubt about our ability to continue as a going concern. Basically, there's no guarantee the company can stay afloat. There could also be hiccups in getting the necessary permits for project development, and the company could be unable to engage drilling rigs and personnel in operations. And in addition, conflicts of interest in negotiations with related parties may arise. Unless they replace the petroleum reserves, their reserves and production will decline over time. Future drilling sites may not yield much, and if they're not able to replace their future production, the value of their reserves will decrease. The company mentions they are subject to operational environmental hazards and expect continued attention and regulations to constrain and impede the oil and gas industry. It's worth noting that if climate regulations are to come in place, then these forecasts are likely to be significantly affected. Here is one of the biggest ones. If TEP fails to meet Massey American's listing requirements, their stock could be delisted. The share price has been historically volatile, and purchasers of their common stock could incur substantial losses. Also, they don't plan to pay dividends on their common stock, which leaves very few options if everything goes wrong. One potentially alarming item is that the company's charter provides that Delaware courts will be the sole and exclusive forum for substantially all disputes between the company and its stockholders. This could limit stockholders' ability to obtain a favorable judicial forum for disputes with the company or its directors, officers, or other employees. Last but not least, let's touch on cybersecurity. The company understands the importance of cybersecurity and is working on a program to manage and reduce cybersecurity threats. They are putting resources to protect their data. However, the company admits any breach could really hurt their business. So what's my take on Trio Petroleum? On one hand, they're making progress on their projects and have identified some interesting opportunities like carbon capture. But on the other hand, these challenges and risks are real. The possibility of being delisted, the going concern warning, plus all those execution and permitting risks in California is a lot. The success of the company comes down to managing risk, raising capital, and actually producing oil and gas. They face an uphill battle and some risks might not be manageable at all. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more deep dives into the world of corporate filings. Until next time, stay decoded.